o'clock, see I got a ball of lit for property, so I slip my beanie on sloppily and promenade out to take up a collection. I got game like I read the directions. I'm wishing that I had an automobile as I feel the cold wind rush past. But let me state that I'm a hustler for real, so you know I got the stolen bus pass. Just as the bus pulls up and I step to the rear, this old lady looked like she drank a 40 or 50. I see my old school partner say his brother got popped. Pay my respects, can you ring the bell? We came to my stop. The street light reflects off the piss on the ground, which reflects off the hamburger sign that turns round, which reflects off the chrome of the BMW, which reflects off the fact that I'm broke. Now what the fuck is new? I need...
Hey, it's Soleil, and this is episode 359 of the Orange Pill Investor. That was the coup. They got some good songs, but just keep in mind they are raging communists. So use some discernment when you are jamming to those cats. So I saw a really good interview on what Bitcoin did. And he was talking about, like where this bottom could go. And he had a much more sophisticated take than the TLDR version that I'm going to give here. But it was basically, the people who were buying during this up move, there's really nothing but air in between this 72 right here. There was nobody selling. So we just moved up. And, this little hold at 84 is heartwarming, I suppose, but there's no reason why it can't just plummet to 72. Now, this guy was talking about if it goes down to like 65, I think he said that's approximately what Strategy's cost basis is, and he said he would basically just be leveraging his entire existence to buy at this price. Now, worst case scenario, I think he said something was like 40 or something ridiculous. And if we went to 40, he was basically saying that would just break the entire bull market sentiment, and there's no recovering from that. Like the the bull market is basically over, and didn't think that was too likely. But even this little, I want to say little dip, really, it seems terrible if people are just, if this is their first cycle or whatnot. But a correction to 84 at these prices is not really, doesn't feel good, but it's really not unusual. So if they want to flush out the rest of the leveraged longs or whatever, they could probably push this down to 70 without too much trouble. Which in the short term would be pretty painful for Strategy too. So that's another 15%. 10% off the current price would be 25. So like another $45 off of here. Yeah. So if Bitcoin goes to 72, Strategy goes probably between 200 and 220-ish. That doesn't mean that I'm planning for that to happen. I'm just preparing myself mentally for something like that to happen. What's up, deeply colonial Bitcoiner, aka Sound Mace? What's up, man? What's up, Howard? Howard says, I saw Checkmate and thought of you. If he's right, it's an argument for not backing away from the shorts. Yeah. Maybe temporarily, but I think what he was saying is that, maybe from this 84, if we springboard from here, this is my words, but it seemed like he was saying the bigger the dip, the more we slingshot in the other direction. So I'm just gonna pull numbers out of my butt, but if we springboard from 84, right? If March 14th hits and we get the diving board or whatever off of here, I don't know, maybe we go up 50% or something. So we see 125. That would be pretty cool. But if we see 72, then maybe instead of going up 50%, maybe we go up 100% on the next rally. And then we see like 140, 150. So that would be even cooler. So it's not that I don't care how far down we go. I mean, as long as we don't break sentiment completely, um, it's hard because if I have to suffer through 72 to get to 140 or 150, I should automatically just be like, yeah, of course. But my leverage would just be so painful uh, to watch that happen that I would almost rather just take 84 as the bottom and then 125 is the next rally. I'm almost uh I'm almost shell shocked into just being like, nah, this dip is fine. I'll take the smaller diving board. Let's just springboard from here. Thank you very much. But either is fine, really. So as long as the bull market isn't over, then there are good things on the horizon. And regardless of if Bitcoin goes up 50 or 100% on the next rally, depending on how far they dip, I mean, it can go above that or less than that. I'm just throwing out hypotheticals, reasonable hypothetical situations. Strategy in November, whether you want to say we did a 4x from September or whether you want to say we did a 2x just in November alone, this was while the ATM was happening. So, there was some selling pressure. I'm not going to, I'm assuming that their algorithm that they use to try to not try to like move the market. Let me just go ahead and say that I think that probably works or whatever. Um, Not that it doesn't suppress the price, maybe some, but I think more than anything, the deleveraging is maybe what the market eventually kind of succumb to. I mean, there's always going to be a correction, but and then again, maybe if we were more leveraged here, maybe Bitcoin's correction would have caused a bigger strategy correction. Like if we weren't deleveraged right now, would strategy already be down to 225 or 200? Um, you can't get leverage to the upside, to Bitcoin's upside, without exposing yourself to leverage to the downside. So, like, if we had gone to 750 a share in November, would I have still had the balls to pull the trigger on exiting all of my leverage positions anyway and sold at the top? Probably not. So, I probably would have just ridden most of this down anyway. So, does it matter if we went to 500 or 750 in November if I wasn't going to be able to time the top anyway? Especially if we would have gotten like right, getting to 750 and then having a 75% drawdown, that would just have even felt worse. So be careful what you ask for, I think sometimes with I think people imagine that because Sailor's so smart, he's supposed to be like a just a straight up alchemist and manipulate the price to number go up forever and never go down. NGU and never go down, NGD. But the point was, if we got to 500 a share during the last Bitcoin run, while we were selling the ATM and while we were in the middle of deleveraging, we've already deleveraged. So if we're going to be re-leveraging and, you know, most of the ATM has already been run through, and we've got all of these convertible bonds that we're about to pile on the leverage again. So instead of selling at the ATM through the next rally, if we're piling on more leverage during all of that, what kind of chart could we be looking at? It could get pretty juicy. So anyway, I'll leave it to you and your market gods to decide what dip you're hoping we we drop to, and and whether that the bigger the dip will justify a nice big juicy rally later. I'm fine with whatever happens. I'm still bullish. Thesis has not changed. This is all short-term pain as far as I can tell. The only thing, so what would change my mind? I guess if that guy was right, if if we saw like 40, sub 50 Bitcoin, that that might break sentiment. If strategy lost their minds and just, I don't know, took on like 50% leverage or something, like their target is like 20, 25, I can't remember exact numbers, but if they just went crazy and piled on way more leverage than they projected, I suppose that might make me nervous. If they sold off their business intelligence software side of the house, I know some people have suggested that, but I think it's actually, and this is long term. So this is 10, 20, 30 years. I think they have to have something besides Bitcoin as their product. So that would be extremely bearish to me if they just gave up on upgrading the world, right? And that Sailor's 10th um, platform that he recommended to young people trying to upgrade the world. Like, strategy has to have some kind of product that they're offering that upgrades the world. So if they sold off their entire business intelligence software, that would be pretty bearish for me. I kind of feel like they just gave up on providing something of actual value to the world instead of just I don't know if it's arbitrage necessarily or just offering these financial instruments and like just waving a magic wand and trading trading the shareholders' risk tolerance for the bondholders' desire for yield. I don't think that's I think that's all well and good for the next 10 years probably, but at some point you have to provide a good or service that's valuable, and then that's what sets you up to be able to buy Bitcoin. And if you can't provide value, you can't no one's gonna pay you any money. So, any of those things would, I guess, could turn me bearish on strategy. But as long as none of those things happen, then I'm still bullish on 2025. All right, let's check these chats and then I will run through. I can't imagine there's a whole lot of tweaks that I'll have to make. We're up a little bit. And when we're up, that usually means I do nothing. I usually well, when I say we're up, like up over the last 24 hours, for God's sake, right? It's not like we rallied to 350 a share or anything. So I can't imagine there's too much that I'm gonna do today. Howard says I'm gonna look like a coward, and that's okay either way for me. Yeah. Um, Deeply says bought some June 600 calls, hit at $5, market sentiment in the tank, said F it and went for it. Yeah, I'm still loading up on as much leverage as possible. Well, I don't know if I have any dry powder to load up on it, but I'm definitely not panic selling any of it. Even if we do see, 225 or something before the Ides of March. Um, Tommy D says 78K seems consensus. Who's consensus? Or where do we get consensus from? That just seemed, yeah, like you just taking the pulse of most of the people that you talk to on social media, or where does 78 come from? Deeply was also interesting to see strategy hold at 250 as Bitcoin continued to sell off. Yeah, I think somebody mentioned that the price was diverging. So let me see. What do we got? The 24-hour and the 24-hour. Well, this is just today. Hmm. Magic Pete, the beatings will continue until morale improves. Well, the beatings might continue until morale gets worse. So it might have to get worse before it gets better. Let's see. I'm not going to worry about picking the absolute bottom by the fear. Yeah, and that's the other thing too. Is like, Josh absolutely called 84. Like that's insane. And I think he called it like months ago. But I don't mind being a little wrong and a little bit early. And to an extent, that's an option seller's entire philosophy. Like, I've made a lot of money over the last 4 years being wrong. And if you're running the wheel, which I haven't really been doing a lot of lately, except in the mining stocks. But let's just say that I was entering into fresh positions literally today. I don't have anything. I have no positions in my portfolio. I want to start running the wheel. I mean, I could just sell a cash secured put, and instead of buying the shares for 25,500, I could sell this put, get paid 1,100 bucks, which is for well, 8 trading days, a little over a week. That's almost, yeah, that's like 4% return on capital for the week. And by definition, selling a put is bullish. But let's say I'm wrong and the price goes to 250. Well, really my cost basis is 255 minus 11, so it's 244. Yeah, 245 minus 1, 244. So I'd still be up 600 bucks. So I can be wrong and still make a little bit of money. And then let's say I all I care about is the premium, right? I don't even know that strategy's a leveraged Bitcoin play. Like I just know the premiums are righteous, and the price is 250, and now I turn around and sell a 260 covered call for 1,300. Well, if the price was 240, it'd probably be half of that. So yeah, maybe I sell it for 900. Now my cost basis went from 244 to 235, and I can keep doing that until I'm wrong again and the price goes over my strike, and then I'm forced to sell my shares at, some profit as long as it's over my cost basis. Plus I get to keep all of the premiums. So selling options is kind of just like being willing to be wrong and still squeeze out little profits here and there. Actually developing an opinion and developing a thesis and saying, I believe in Bitcoin. I think it's going to 150 in 2025, or if you're bullish enough, I guess a million. And then, you know, putting your putting your money like legit on the line and buying calls, that's the complete opposite. You can't you can't make money when you buy options if you're wrong. You have to be right. So these damn and it doesn't matter, like if you're buying if you're buying grains 10% out of the money, if you're right, then huzzah, right? This nice little graph here. If you're right and we get to whatever, 400 a share, you know, boom shakalaka, you made a bunch of money. If you're like super duper risky lottery ticket, what's the delta on this, right? Delta's like 0.12. So there's like a 12% chance that these actually go in the money by December. You still have to be right. Like the price has to go up. And not only do you have to be right, but you have to be so right that it makes up for all of the money that's going to drain out of the account before you're right. Right. So it's going to cost $1,000 for this option, and $8 is dropping out, decaying every day. So that's $40 a week. If that goes on for 10 weeks, that's $400 is drained out of this account or out of this option, and it's only worth like $600. So now it has to go up enough to just get you to break even and then keep going up to actually get you some profit. So buying options, you have to be right, but you have to just be like more right than decay even. Whereas the option seller makes money even when they're wrong, they just don't make as much, right? So if the person who did buy calls and was correct and he won his lottery ticket, that still doesn't mean that I lost money. That just means I didn't make as much money as that guy did. And I'm generally okay with that. So I like option selling as philosophically, but Quant Bros 1 kind of broke my brain a little bit and made me a little bit greedier than I'd normally allow myself to be. When I say a little bit, I mean a lot of bit. Um, in a normal trading environment, I probably wouldn't let long calls be more than 20% of an entire portfolio. And it's probably over half right now. Like that's my level of bullish, irresponsibly longness that I have. 2025 remains to be seen whether that actually works out, but I would really like a nice do-over. because I think I fumbled the ball in November. I took off a little bit of profit here, like maybe 10%. I scalped off, but I held on to way too many long positions and even rolled some up to the new strikes that were being made available. So that wasn't too bright. All right, let's take a look here. So I sold 4 of the 250s for 760, and this trade is going against me, which is perfectly fine. I'd rather it go in this direction than in the other direction, that's for damn sure. So nothing for me to do here, but just wait until tomorrow morning, and we'll see. If we're still trading at 257, then the, um, the amount that I have to pay to cover will get closer to just the difference between the current price and my strikes. So right now, these are in the money, and if I calculate how much extrinsic value is left, meaning how much money I can expect to drain out of this option and into my account, is is the option price minus the intrinsic value. And the intrinsic value is the difference between the strike and the current price, which is 721. So if I take 1055 minus 721, that leaves me with 330. So there's about 300 bucks worth of extrinsic value that I can collect if I do nothing with this option. I know new option sellers freak out when they see this get bigger than this, but if that was going to freak you out, that means you shouldn't enter into this trade at all. If I had some reason to believe that the price was going to go up, then sure, absolutely, just exit this trade, no problem. But I don't have the slightest idea what's going to happen between today and tomorrow. But I do know that if the price is still 257 at this time tomorrow, I'll only have to pay 700 bucks to close this instead of 1,000. So won't be doing anything with this trade today. Similar situation here. Sold the 325s for 8. They're still worth 760. So same here. Same here. Yeah, there's nothing really to do here. The joint account, I think, yeah, I don't have anything at the money here. Yeah, these are all just basically the same that I sold them for. Nothing to do. My allowance, I made a deposit to it. I think I spent all of that money. Yeah, one covered call. It's basically worth what I sold it for. Nothing to do here. The real interesting dilemma that I'm going to be faced with is if we're still trading around 84K Bitcoin on March 14th, am I going to have the guts to take like the majority or all of my covered calls off and just let my theta run negative as shit for a couple of weeks and see if we can get a nice bounce? We'll see. I may not do it in this account since this is my challenge account versus MSTY. I may try to carry positive theta at least in this account just to be in keeping with the spirit of that challenge. All right, so sold the 260. It's a little cheaper than I sold it for, but again, all of this is since this is out of the money, there's really nothing to calculate. The entire amount, the whole 425 bucks is all extrinsic. So if we close at 255 tomorrow, I can buy this back for nothing. So nothing to do with that option. Same thing with this covered call. The price hasn't dropped, so there's no reason to really roll this down. And I don't think I have any cash to speak of. Nah, not really. I guess I could buy like one share or something, or I could go out here and I could pick up like one long call, I suppose. Let's double check the 5K account real quick, which unfortunately looks like I'm trying to turn it back into a 5K account, like literally. $10 call for 4-4. I had rolled this one out. So nothing to do there. Same thing with Wolf. These $400 calls, I think I rolled these as well. Yeah, so there's nothing to do here. And I don't think I have much buying power to speak of. Yeah, 290 bucks. Yeah, no trades. No trades today. Just talking. All right, so we'll check chats and then maybe this will be a quick one today. Deeply says, I need everybody saying the top is in and we're headed for 40K. Yeah, is that because they're going to be violently wrong? Okay, cool. Tommy D says that's the pulse. Okay, good to know. Hippie Hank says SMST has made me partially whole. SMST. Is that a ticker? SMST? Okay, so this is a short. This is an inverse product. Okay. Inverse leverage. Interesting. So you went real short recently? That one basically doubled. Okay. Rats on sniffing that out. Emperor says, is strategy front running Bitcoin again? It looked real good yesterday. So Josh was seems like he's a little annoyed with, it's kind of funny. He's a little annoyed, and this is me speaking on how I'm interpreting, and I could be interpreting it wrong. So I don't want to seem like I'm speaking for him, but it seemed like he was a little annoyed with the idea that being so transparent is a good thing. Like, we applaud Saylor for being transparent to the shareholders, but it sounded like he was saying, like, come on, man, you can't be so predictable that some of these I don't know, players maybe that are so big they can just manipulate the market and front run some of the things that Saylor's doing. Like, he's famously said he's going to buy the top forever, which sounds that sounds like a big swinging dick thing to say, but at the same time, if that's just going to let other people front run you and profit off of your predictability, then who are they profiting from? It seems like they would be profiting off of the shareholders, right? If they're not necessarily the people who can diamond hands through all of the volatility, but the whole point of the convertible bonds is supposedly that the bondholders are afraid of the volatility. So they're trading the volatility to the common stock shareholders who can handle the volatility and are going to be rewarded with the limited upside nature that the bondholders are willing to accept, right? They're willing to accept smaller returns for less volatility, and it's the shareholders that are supposed to receive the difference, right? We're supposed to get that the leftovers, right? piled on top of our shareholder price. But if some of these, um, did he call them vultures? I can't remember exactly what the derogative word he used for it, but some of these people that are maybe able to make money off of that predictableness, I don't think that sat very well with Josh. So, I don't know if it would help for them to sandbag a little bit of cash and not just smash by like immediately. It seems like it would be, more accretive if they were buying Bitcoin at 84 instead of 94. So, yeah, I don't know what to think about all that exactly. I know they're not just I know they do have a plan though. In one interview, I think he said something like there's a certain sweet spot where I assume that they're targeting like the MNAV. There's a sweet spot where I'm guessing it's probably between 2 and 3 where they could just sell at the ATM and buy Bitcoin at a discount. And it doesn't really matter if they're buying Bitcoin at the top because they're selling strategy even toppier than that. Um, but then at the same time, it's almost kind of like, well, if Sailor's going to sell strategy at the top, shouldn't I? Like, if he's doing it, wouldn't I have to be a fool not to? So that's why when the implied vol chart looks like this again, I will be taking off all my leverage and selling covered calls like an absolute madman. 24 says, love the content, bro. Bro. What's your cost basis on it? So actually, I guess I've been buying the top too. So my cost basis back in March was probably, I don't know, it was under $1,000 a share. But I will buy shares and sell shares and buy shares and sell shares. Yeah, my cost basis on strategy is actually not great. So my cost basis is 340, which means I'm down $90, $90 a share. Um, and I kind of use shares and leverage as a trading pair against itself. So if I sell covered calls, when I was selling covered calls and the price of strategy was 500 a share, I was taking that cash and buying shares with it. And now that the price is 50% off of all-time highs, now when I'm selling a covered call, right? Like I took this 2,800 bucks and bought more leverage. I can't remember if I bought the Septembers. So I do it a little different. Um, Depending on if the price is high or low, I will either add shares to my position or add leverage to my position. So Buffalo. So cost basis on your strategy is 259. Okay. So you're right around break even. Should do well. Buffalo bought January 380s and 990s yesterday, along with September 300s. Get back to stacking shares soon. Yep. If we get a nice rally, those should all do well. We just we're just gonna need at least one. I need at least one good 2025 rally. The only thing that Bitcoin is making me a little bit nervous about, unless strategy does stack a ton of Bitcoin at these prices, like we need that rally before the end of Q1 in order to qualify for the S&P 500 on the, as early as possible. So if Bitcoin doesn't rally by the end of Q1, I guess we wait a quarter to get into the S&P 500. That just postpones it to the end of 2025 maybe, which would be annoying, but not the end of the world. That's just delays the inevitable, I think. Chris says a lot of us fumbled in November, not just you. Yeah, I was in good company. That's for sure. What's up, Canal? If we're trading at 84 around Pi Day, I wonder if the whole spring pump thesis is invalidated and we should look towards Q4. Yeah, I got it. Since I don't really see what Josh sees, like I don't know how to do all of that stuff. I'm not really sure if he's saying um it still needs to be under 84 or yeah, I don't know what invalidates what, to be completely honest. Um 24 hours to live says, did you mention what your cost basis is in total? Meaning like what is the total portfolio value? I mean, I've got 1,100 shares at current prices. I'm not sure what the question is. Let's see, Emperor. I feel like the predictability only works when Bitcoin is being boring. As soon as it rips violently, and it will, all models literally destroy. Yeah, I think that's Sailor's point about he doesn't mind the short sellers because they'll buy when we want them to. And but those short squeezes, I don't know if those type of things always seem to correct. So I don't know if that's permanent. Like, we had this amazing rally to 500, but now we've already corrected 50%. So, is it better to just grind, right? We had 115 to 230. Is it better to grind up slowly and not have to deal with big corrections? Or, I'm sure the shorts got screwed over this 2-week period. But unless you're able to just like pounce on that moment, then you have to deal with the correction if you're just hodling through all of this shit. Yeah. So I don't know what's better. I don't know what's better for us long term. Let's see. 24 hours says I've got 3,500 shares and wondering should I wait to sell covered call for next week? Wait for it to jump. What's your strategy with it? So I have a little bit of a different situation since I quit my job, and this is the only way that I can get money. Is I have to be selling a certain amount of covered calls in basically every environment. I could take a couple of weeks off, but I really can't just I can't just say, okay, well, I'm going to stop selling covered calls until we get to 300 or 350 or 450 because that, what if we don't get that for 4 years? um, So in general, it's better to sell covered calls after a rally because you're going to capture all of the rally, right? So, when we were trading at 135, if you waited until we got to 200 and sold covered calls here, you're better off than selling them at 115 and missing out on the price doubling. That still isn't necessarily going to save you, because if you're selling covered calls at 200 and the price goes to 255 or 350, you can still have your shares called away. Um, but I think it's pretty simple and common sense that waiting to sell after a rally is going to be better than selling at the bottom of a correction. And then this implied volatility chart, which is on Market Chameleon, could inform someone that's paying attention that implied volatility has spiked, which means that option prices have spiked, which means that that could be a good, option selling environment. So waiting for high implied vol and waiting for rallies to have occurred are good entry positions for covered calls. So I can't say whether you should wait for next week or not, because strategy could go up 20% before next week, or it could go down 20% next week. And if it goes down, then you should have sold a covered call. And if it goes up, then you shouldn't have. So it's really just a complete coin flip. And so if you don't need the money to live on, like if you have a regular job and you can just wait as long as you need to wait, right? If you want to be a sniper, then, if you were a sniper in 2024, then you sold covered calls in March, maybe like March, April, and you sold covered calls in November, December. Maybe those are the only 2 months you sold covered calls in the entire year. But for somebody like myself who, um, I'm kind of battle hardened, and I've lost a ton of upside in these March and November events, that I'm just kind of used to it. Like it's all just part of the game for me. Um, Somebody like that might be more comfortable selling covered calls in every environment, but the current environment is not, it's not necessarily optimal. Even though the returns, like the returns seem pretty juicy, right? Like it's, even though implied vol is low, it's kind of like, oh, okay, well, on a $25,000 investment, I could sell a covered call. Let's not be completely greedy, but well, whatever. Yeah, just looking at no upside whatsoever, right? 3-4% return on capital in 8 days, selling at the money, no upside whatsoever. That's still pretty good, even with low IV compared to most stocks. Like if you're looking at Apple or you're looking at Microsoft or any of those kind of things, even these low premiums seem very attractive, but it's not going to seem very attractive if the price pumps to 300 or 350 in short order. So I really can't say that you should do it today or you should do it next week. You just have to be aware of the risks. Um, but if I had to say, like, no, it's not the optimal covered call selling environment. That would be when the price has already rallied and when you see these giant implied vol spikes. Deeply says, investing is the only business in the world where when things go on sale, everyone runs out of the store. Yeah, that's a good one. Anthony says, what happens if my poor man's covered call isn't properly structured as per the blue collar investor formula? Do all the contracts get assigned if the price runs up, even if it doesn't hit the strike? Do all the contracts get assigned if the price runs up, even if it doesn't hit the strike price? Okay, so yeah, hold on one second. All right, dog was being a little bit of a whiny baby, and he's usually pretty good. So I don't know if he needed to go out or puke or something. Um, all right, so let's take a look. Take a look at the poor man's covered calls. Poor man's covered call. So let's say that I was setting up poor man's covered call today. And I'm gonna go out here and grab June 2026. I'm gonna grab some that are in the money. Let's do 200 strikes. And if I go by the formula, I could probably sell anything that's 200 plus 120 or above. So as long as I'm selling the 330, let's go to, I think the 11th of April is around 45 days, maybe 42, 43. Oh, damn. I can't even hit the three. This is just barely in the range for their formula. So let's take a look at this and let's calculate this all the way up to like 2,500 a share, right? Something insane. This is safe because you can see that even though there's diminishing returns, like even if we get an insane rally, you would end up having to pay for the April 11th 320 call, right? If we get to 24.64 a share, you're going to have to pay $214,000 to close that contract, which sounds terrifying, except that the call that you purchased is going to be worth $227,419, meaning you'll still get 13 grand worth of profit and you paid 11 up front for it. So you get a little $2,000 profit. But it sounds like the way that you're phrasing the question is, do all the contracts get assigned? So it depends on when, and it might depend on your exchange as well. So if the person who bought your 320 call, right? If the price gets to like 500 a share and they're like, screw this, I'm out, I want to exercise this call, then you're going to be on the hook for selling them 100 shares at 320. If you don't have 100 shares, which I assume you don't because you're forming a poor man's covered call, then you could protect yourself by exercising your $200 call, which means you got to come up with 20 grand instead of 32 grand. So, that's your protection. But it really wouldn't even make sense to exercise this call necessarily, because if the price does go to 500 a share, this option is going to be worth like way more. It's still going to have some um, extrinsic time value in here. So the best case scenario is that you just close both of the contracts together. Like you wouldn't want to wait necessarily until, you know, expiration date if something like this happens. Just go ahead and close your 200 strike and your 320 together. because if you're forced to exercise your $200 call months and months and months in advance, you're going to lose all of the extrinsic time decay. Now, granted, someone can exercise this call anytime they want, but they generally don't exercise weeks early, even really days early. I suppose if we ran to 2000 a share, they might exercise super early, but you do have to keep in mind that that is an additional risk that if they exercise the short call on your end, it's a long call for them. If they exercise this early, you either have to fork up the shares or fork up the 32 grand. Um, sorry, no, not even fork up the 32 grand because if the price ran to 500 a share, um, you either have to fork up those shares or if you can't, then you have to exercise your option, which would screw you over because if you've got a year left on this, there's like a ton of extrinsic value that you would be forfeiting. So that is an additional risk to poor men's covered calls that I've only covered, fairly infrequently. It was actually brought to my attention by this guy named Coach Mack, who's a veteran option seller. He's a TradFi guy, so he's not really orange pilled. But yeah, even with a poor man's covered call, if you don't have the shares to fork over, like if you don't have a poor man's covered call on top of owning shares, if they exercise early and you can't come up with the cash or the shares, then you could be forced to exercise your option to protect yourself from that. But you would end up getting screwed on um, forfeiting all of your extrinsic value. So just keep in mind that that's an additional, I guess, the risk or threat to be worried about. Eric says Josh's bet from a few months. He is calling for over 150 Bitcoin by end of April. Yeah, I'm definitely hoping he's right. So that would be almost a 2x move from where we are now. So life will be good if we see that. 24 hours says, are you planning to keep this stock long term or selling at the top? So I will keep shares long term just for sentimental reasons. I'd like to get up to 3,000 shares because I had 300 shares before March and I had 100 shares called away. So I'd kind of like to get back to where I was, before I started. And I will carry some shares through the bear market if we get a bear market in 2026, 2027. I'm going to assume that the 4-year cycles continue until they don't. But after the next rally, so if we get another March event or we get another November event, I will be exiting all of my leverage. So all of my long calls will go away. All of my longs will go away. All of my longs will go away. All of my debit spreads will go away. And I don't really mind holding shares through a bear market, some amount of shares. But when I exit all of those positions, I'll be adding some shares, but I will be pivoting, I don't know, half this entire portfolio over to Tesla. It's the only other stock that I am personally bullish on over the next 20, 30 years. So it'll be nice to have something I don't know if that's a traditional pairs trade, but something that I can just rebalance back and forth into. Yeah, Tesla's the only other stock that I'm aware of that is disrupting and is the clear winner. So that's my plan. The next rally, I will retain some shares, but I will exit all of my leveraged positions. I will YOLO into a bunch of Tesla positions and have 2 stocks in my portfolio. You're absolutely welcome, Anthony. All right, looks like we're all caught up on the chats, so we will call it a day. Be good, y'all.